Good morning, I'm Maiki Oreta and you're watching Business 360, where we break down the numbers, connect the dots, and give you the developments and the insights you need to navigate, adapt, and lead. Let's dive right in. The Bangko Sentral may still cut rates next week, even as inflation is expected to pick up in September. The peso rebounds as the dollar weakens amid the U.S. government shutdown. And the White House warns massive layoffs are imminent also because of the shutdown. One day has passed since the U.S. federal government shuts down after lawmakers failed to agree on a stopgap funding bill. A continuing resolution is a temporary measure that keeps the government open by extending the previous year's budget for a limited time. The White House warns massive layoffs are imminent, with D.C. home to nearly 50,000 federal workers. New York Governor Kathy Hochul, joining Democrats at a press conference, said that the shutdown was a deliberate move by President Donald Trump and the Republicans.
So tonight, when people look out on the harbor, see that Statue of Liberty, searching for that torchlight, I don't know if it's going to be on or not. But it symbolizes all that is great about America, or so we thought. And it has great risk of being extinguished. And when that happens, know the truth. It was Republicans who did this, who've done this all over America.
Let's see how global financial markets performed overnight. Wall Street's major stock indexes rise, led by gains in the healthcare sector. This comes despite weaker than expected job numbers and ongoing uncertainty over the first day of a U.S. federal government shutdown.
I think what is keeping the stock market relatively flat to a little in the green is that most people consider the government shutdown at this point a little bit like the boy who cried wolf. We've seen this before. It almost always gets resolved fairly quickly. Both sides are talking tough because they want to see if they can get the upper hand. But ultimately, we've always seen that these things work themselves out fairly quickly because neither side wants to hurt their constituents and the American people.
The Dow Jones Industrial Average gained 0.1%, the S&P 500 higher by 0.3%, and the Nasdaq higher by 0.4%. In Europe, markets also finished higher. The UK's FTSE up by 1%, Germany's DAX up by 1% as well, and France's CAC 40 higher by 0.9%. Here at home, the peso rebounds as the dollar weakens amid the U.S. government shutdown. Data from the Bankers Association of the Philippines shows the peso closing at 58 pesos and 12 centavos to the dollar, stronger by nearly 8 centavos from Tuesday's finish of 58.20. Rizal Commercial Banking Corporation's chief economist Mike Oreta says the local unit gets a boost as the dollar slips on the back of the shutdown after lawmakers failed to pass a spending plan. A wider trade in goods gap is expected to keep the country's balance of payments in deficit for the next 2 years. The Bangko Sentral ng Pilipinas sees a BOP deficit of $6.9 billion, or 1.4% of GDP, in 2025. For 2026, the deficit is projected at $3.4 billion, equivalent to 0.6% of GDP. The current account shortfall is also seen at 3.3% of GDP next year, easing to 2.9% in 2026. The BSP says that the outlook reflects a wider trade in goods gap, weaker service receipts, and restrained capital inflows amid global uncertainty and shifting trade policies. The Bangko Sentral may still push through with an interest rate cut next week, even as it expects September inflation to pick up. The central bank projects inflation to settle between 1.5 and 2.3%. If the high end is hit, it would be the second fastest pace this year. The Philippine Statistics Authority releases the official print on October 7th, 2 days before the BSP's next policy meeting. Ateneo economist Luis Dumlao says that the projection is still within the BSP's 2 to 4% target, giving policymakers room to be dovish. He adds that a rate cut would help support GDP growth. Reyes Tacandong's senior advisor, Jonathan Rovelas, notes that any rate cut next week could have an impact lasting a year. He adds that the Monetary Board is likely to hold rates in December unless the U.S. Federal Reserve eases further. Now, the IMF is sounding the alarm. Higher tariffs and weak investment growth are putting the brakes on the Philippine economy. The country is now seen missing its targets until next year. Paolo Barcelon has the details.
The IMF places Philippine economic growth at 5.4% in 2025 and 5.7% in 2026, down 0.1 and 0.2 percentage points respectively from its July forecast. The IMF says this is due to monetary easing and recent legislative measures to promote private investment. The group also says inflation is projected to average 1.6% in 2025, citing rising food and transport prices, while core inflation is expected to remain muted at 2.5% in 2026. The IMF says they are now watching how the flood control scandal will impact the economy and investor confidence.
It's not yet clear whether and how these allegations will impact investor and private sector confidence, as well as how their perceptions and behavior. We will continue to monitor the developments and will provide an update.
The organization is also closely monitoring the surge in consumer loans, especially as credit card debt reached critical levels back in July, according to a study from Singapore-based fintech firm Roshi. The IMF is also urging the government to spend more on climate adaptation and resilience to natural disasters in the face of several typhoons and a major earthquake hitting the country this year.
Climate shocks do work like a supply shock. They tend to raise inflation and lower output. We understand that the Philippine government has a comprehensive and proactive plan for climate change adaptation.
The group also says the country should prioritize digitalization of payments and lowering trade barriers. This as the Philippines assumes ASEAN chairmanship and will host its namesake summit in 2026. Paolo Barcelon, Bilyonaryo News Channel.
The Philippine manufacturing sector slips back into contraction for the first time since March as producers report declines in output and new orders. S&P Global data shows the country's Purchasing Managers Index falling to 49.9 in September from 50.8 in August, the lowest since March's 49.4. S&P Global says the weaker operating conditions come from a renewed drop in order intakes last month. A major governance shakeup is coming to boardrooms. The Securities and Exchange Commission is limiting the term of independent directors to 9 years. SEC Chairman Francis Lim says the move is meant to ensure true, meaningful independent directors. Under the draft memorandum, independent directors will serve a 3-year fixed term, but can only be re-elected for up to 3 consecutive terms, or 9 years in total. At present, they're elected yearly. The new circular takes effect immediately, meaning independent directors who hit their 9th year in 2026 can no longer be re-elected. Now, the flood control corruption scandal was triggered by a garage of luxury cars, and now Customs is moving to auction off 13 of them worth up to 220 million pesos. Contractors Curly and Sara Discaya have 15 days to present valid import documents or lose the vehicles, including a Rolls-Royce, Bentley, Maserati, Mercedes, and Cadillac, among others. The cars were placed under a warrant of seizure and detention after investigators found probable cause and multiple violations of customs rules. 7 had no import entry or certificate of payment, while 6 carried entries but lacked proper or valid certificates. Another potential ghost project scandal is brewing. The Agriculture Department flags 125 million pesos worth of farm-to-market roads in Mindanao that exist only on paper. The DPWH lists 9 projects as completed, but DA records show work hasn't even started. 7 of the projects are in Davao Occidental and 2 in Lanao del Sur. On record, 3 were marked completed in 2021, 2 in 2022, and 4 in 2023. Agriculture Secretary Francisco Tu Laurel Jr. says the projects are small, less than 1/20th of 1% of all farm-to-market road initiatives. Still, the DA is coordinating with the DPWH for a possible inspection of the suspected ghost projects. We're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line. Welcome back. Let's check on Asian markets this Thursday morning. Right now, I'm seeing a sea of green. The Nikkei 225 is higher by 0.5%. Hong Kong's Hang Seng Index up by 1.4%. Shanghai's Composite up by 0.5%. And Singapore's Straits Times Index higher by 1% as well. Here at home, the main gauge snapped out of a 7-day losing streak, bouncing back above the 6,000 level and leading Asia's markets. The PSE Index jumped 1.22% or 72 points to close at 60.26, making it the region's best performer. Value turnover reached 6.8 billion pesos, lower than the 9.1 billion the day before, showing many investors remain cautious. Analysts say the rebound was driven by cheaper valuations, a stronger peso, and lower government debt levels. But they warn the market needs a stronger catalyst to sustain this momentum. Global cues like U.S. rates and oil prices, alongside local headlines on inflation, politics, and fund flows, will set the tone in the days ahead. Taking a look at how the main gauge is doing this morning, at this very minute, as of 10:17, it's in the red, down by 0.1%. Hanging on to the, clinging to the 6,000 level at 60.19. Broader all shares index in the red as well, down by 0.1% to 36.53. Taking a look at the sub-indices, we're looking at a mixed picture. The financials, industrial, property, and services sectors are contributing to the market's declines, whereas the holding firms and mining and oil counters are helping to offset it. Total volume traded is at 235 million shares, valued at just about 1 billion pesos. Market breadth is positive. However, we've got 60 advancers, 54 decliners, and 52 stocks unchanged. Taking a look at the currencies market, the peso opened at 58.05 against the dollar, up from its previous close of 58.12. Now, after years of deadlock, a breakthrough for the mega subway project. The Homeowners Association of the private subdivision Corinthian Gardens in Quezon City accepts the government's compensation offer, clearing a major roadblock to the so-called project of the century. G. Baroga has the details.
The government is getting closer to making the country's first subway system a reality. The Department of Transportation is now aiming to secure 100% of the right-of-way for the Metro Manila subway project by the first quarter of 2026. According to Acting Secretary Giovanni Lopez, they're already 3/4 of the way there, with 75% of the needed land access already in the bag. A big reason for that progress, Corinthian Gardens Association has finally agreed to the government's compensation offer. First on and only reported by Bilyonaryo.com.
By end of this year, we're targeting 95% of the right-of-way issues for subway. And by first quarter of next year, sabihin natin mga March or April of 2026, the 100% of right-of-way, we'll be able to solve it by next year, 100%.
Secretary Lopez says the remaining hurdles are mostly down south along the alignment, and procurement is already in motion. In an interview with BNC Mobility, he shares that talks with Corinthian Gardens actually go way back to 2019, but hit multiple roadblocks along the way.
So naantala talaga from 2019, of course, pandemic, but from 2022, 23, 2024, wala po nangyari. And only April of 2025, this year, we were finally allowed by the Corinthian Gardens to have it appraised.
The subway's alignment cuts across 500 meters underneath Corinthian Gardens, affecting 33 properties in total. According to Secretary Lopez, these are in 3 streets: Sanso, Ocampo, and Tabuena. As of September 30, the DOTR has sent out 32 compensation offers amounting to over 820 million pesos. So far, 20 owners have accepted. That's more than 461 million pesos worth of settlements, while negotiations are still ongoing with the rest. So how are these amounts decided? According to the old right-of-way law, the government was required to pay 20% of a property's fair market value from the surface down to 50 meters. But under the new Accelerated and Reformed Right-of-Way Act, that's been shortened to just 18 meters. Here's where it gets tricky. In Corinthian Gardens, the tunnel boring machine will pass through 19 to 31 meters underground, technically outside the range covered by the new law.
But there's this transitory provision under the new law that we can still use the old law as basis for payment as long as there is proof na willing sila to sell. That's why the last few days or few weeks, the owners of Corinthian Garden deem it, more prudent to might as well sell it.
The DOTR says paperwork is now underway, and they hope to complete all payments once property titles are officially transferred to the government by December. As for the tunnel boring machine, it's currently in White Plains and expected to reach Corinthian Gardens before the end of the year. The department remains confident that partial subway operations covering the stretch from East Valenzuela to Camp Aguinaldo are still on track to open by the second quarter of 2028. For BNC Mobility, G. Baroga.
Now, the PSC index briefly sinks below the 6,000 mark, a level not seen in months as foreign funds exit. The peso slides and political noise weighs on confidence. Main gauge manages to bounce back, but the big question is whether this recovery can hold. To help us make sense of what this means for investors, for companies, and for deal flow, we're joined by Ed Francisco, the president of BDO Capital, one of the country's biggest and most influential investment houses. He has a front row view of how corporates and investors are adjusting behind the scenes. Hi, Ed. Thanks for being here with us this Thursday morning.
Morning, Maiki.
Okay, Ed, the index briefly fell below 6,000 before bouncing back. From your daily conversations with business leaders and investors, how would you describe the state of our equities market right now?
Well, it's moribund. We're trying to do stuff, but it's really very challenging.
Yeah, we slipped below 6,000. Year to date, we're down 7.8% year to date. At these levels, it doesn't feel like a true representation of the Philippine economy. GDP growing at least 5%. That's the outlook for 2025. IMF sees GDP at 5.4% in 2025, inflation at 1.6%. Is the equities market a true reflection of the economy at this junction? What would you think?
Yeah.
What do you think?
No, I agree with you. It's not a true reflection. The PSE right now is more sentiment-driven, very negative because of what's happening from the political front. But supporting what you said also, the real economy is growing in excess of 5%. Because loan growth continues to grow. We're seeing above average loan growth at around 11-12%, and that's for the whole industry. And there's a direct correlation between loan growth and the economy, and it's consistent. So while the PSE is down, real growth is still happening, which is great.
Yeah, the banking industry is doing well. Loan growth, that has a multiplier effect. That's up 12% year to date. So that's a better indication of where we are economically. So talking about this sentiment, you've got a unique vantage point, leading one of the country's top investment houses, engaging with investors and daily business leaders. What do you deduce about sentiment today?
Yeah. So the foreign investors, of course, are very gun shy, and it's seen by them exiting the stock market. But remember, that's only one side. That's more, I guess in a way, they're more short-term. Some of them are more short-term. They want to make the quicker buck. So that's hot money. The nice thing about it, we're still seeing a lot of deals in the M&A front, the private equity side, foreign investors are still there, so which shows that they're willing to come in and they're longer term players. So there are two sides of the coin. But yes, some of the foreign players are out, and that's caused the exodus in the stock market. But there's still some things happening.
Yeah, we're a small market. There's a lot of negative news, a lot of negative overhang. A lot of it is also local. Of the downside risks right now and on the horizon, what are the ones the investing community, from your point of view, is most concerned with? And
Downside risk is really more on the political front, because our corporates are doing well. So even if the index is going down, the corporates are delivering. So it's sad because that means their price to equity or their valuations are going down despite they delivering. So it shows you it's beyond what we can do. The corporates and the chairpersons, the CFOs I'm dealing with, the CEOs, they're all scratching their head. They want to do buybacks, they want to support the stock, but if foreign investors sell or the sentiment is weak, then they're really at the mercy of the stock market.
yeah, speaking of being at the mercy of the stock market, a lot of top companies are doing share buybacks.
Yes.
From boardroom conversations you're a part of, are these genuine signals of confidence, or are they defensive moves in a weak market?
It's both. Because the market is weak, they're showing how much they believe in their stock by willing to buying back more shares, which is great. The only problem there is some of these companies are already reaching the limits or float requirements, and they're unable to execute more. But for me, it's still a positive sign. It's not always positive in that sense that it brings the price up, but at least it keeps the price from going down further, and it shows that the major shareholders are really behind the stock.
Mm-hmm. I mean, with these concerns, you talk to a lot of people behind the scenes. Are there concerns, and is there talk of possible delisting given this environment? Because it's big effort to be a publicly listed company, and we saw it with MVP and Metro Pacific. They decided to just kind of delist. Is there talk of that now, given the state of the market and how it's been over the past decade?
Okay. Again, I give them on both sides. On one side, BDO Capital, and BDO Sec handle a lot of these delistings. Most of the delistings we advise, especially on the security side. But on the other hand, if we can dissuade the CFOs and the owners from doing that, we'd love to, from the market perspective. But yeah, sometimes these companies feel that they're not really properly valued. They'd rather delist. I'm hopeful that in the case of MVP, while they've delisted MPIC, when they list the tollways, and then they're listing Maynilad, they'll also create value and give upside to investors. So that's the positive side there. But yes, many are considering delisting here, and even considering maybe listing abroad. But if we can, we want them to stay here because our market is already small, so we don't want it to shrink further, Mikey.
Yeah, it's small, and we don't want it to shrink further. But you know what? Maynilad's IPO is coming up. This is the second IPO for the year. Could be the last. We don't know. A top water concessionaire. In today's market, what are your thoughts on this IPO?
Yeah. No, I'm very hopeful for Maynilad. We believe in the stock, and I think it will be a very good yield. It's a utility anyway, so it will have constant dividends, and parang nakakatawa, Tagalog, it's umaagos nga yung tubig, so it will just continue, dividends will continue to go to investors, it will continue to grow. So while it might be the last IPO for the year, at least it's very good because it's large, but it shows that there's still interest. Yeah.
Right, and it's a utility firm. It's a good hedge. So good yield, price appreciation. There's talk of the price at 15 pesos per share. What are your thoughts on this?
If they price at 15, I think that's a very good price. We ourselves, our customers are lining up for that, and it's a good investment to have because at least you invested it, put it aside, just count your dividends, but you can keep it for years because it'll be a part of the index eventually anyway, and hopefully even for abroad, they'll buy into that. So I think it's a good investment.
Yeah. Interestingly, Maynilad was the first to get the SEC's green equity label, yet despite this ESG credential, it still had to cut its IPO price ceiling to 15 pesos per share. What does this tell you about what this label really means and how it could move the needle for investors?
No, having the green label is always very good. I've done deals where even for green bonds we raise, it attracts a different kind of investors. It will allow you to tap foreign markets in the case of Maynilad, but even from the local side, there are investors who want green labels. And it's not just for greenwashing, but they really respect that. We've done a couple of deals for Ayala, also Ayala-linked sustainability bonds and the BDO sustainability bonds, for example. It's great from the issuer. There's growing demand for that. And in the case of Maynilad, it's a testament for them because the deal is so large, right? By standards. And so when it's pulled off, it's hats off to them, to MVP, to Marubeni, to Sid Consuni, the shareholders.
Yeah, you said it attracts a different kind of investor. Maynilad is attracting cornerstone investors, the IFC, possibly the ADB, both with green mandates. Is this a sign that long-term institutional funds are willing to back IPOs even when local demand is soft?
Yes, so thank you for bringing that up. It shows you that despite the PEC being down, but if there are still good companies in the Philippines and local and foreign are going to invest. We can't disclose it yet, but I understand there'll be even other cornerstones joining. There might be even from our side joining. So it shows you that they're long-term investors. Yeah. Despite the market negative news, I think this will do very well.
And Ed, from a capital market perspective, how difficult is it to price deals when demand, as it has been very soft?
Oh, it's really very challenging. And that's why our pipeline is getting longer. We have some deals that we wanted to do last year. Yeah, we pushed back to this year, and then we push back again to next year. So it's very challenging because we have good companies. I was with SEC Chair Francis Lim yesterday and Mon Munzon, President Mon Munzon, and we were just talking about the challenges. Great companies, great stories, great future, but because the prices are too low, some of these sponsors says, I don't want to give it away naman for free. I think I'm doing a disservice, so they postpone. But there will still be deals. It's just a question now, maybe rechannel it, do something else.
Timing. You know, if Maynilad pulls off a successful IPO in this environment, what does that signal for the broader IPO pipeline and for capital raising in the Philippines in general?
So it shows you that at least while the equity markets are very challenging, it shows you that we have the full breadth. Because for an example, with Maynilad, with Mon Fernandez, the president, who's done an excellent job, they have access to, we help them raise green bonds, peso bonds. They have access to foreign equity and local equity. They have continuing access to their bank loans. So it shows you that the whole gamut is there. As long as you have a good company, good governance, then the markets won't close. One form or another, there'll be financing because we don't want to curtail the growth.
One form or another, there will be financing. That's right. But, you know, globally, when you step back, looking at the bigger picture, globally, deal activity has shifted away from IPOs. How much of that are you seeing? Well, in Philly, we've only had, this is only going to be the second. So, I mean, what's keeping the market alive right now?
Right. In the Philippines, fortunately, we're very bank-centric. So our loan growth is doing very well as an industry, and BDO's growth also is exceeding industry growth. We're seeing it in all cylinders, including consumer, even housing loans, auto loans, credit card loans. When I talk to my colleagues, it's really very strong. It's a good sign. So, and they're using it also for investment. It's not just because they need to borrow more. And household debt is still not too high, which is good. So it's showing that there's growth happening in the country. I remember we have a large, the economy, the underground economy. So they're using it also to finance those things. Financial inclusion is improving. More unbanked are being banked. So I think it's still good overall for the Filipinos and the consumers.
Well, like BDO, people will find ways, right?
Yes,
Okay, in weaker equity markets,
Okay.
as ours has been, how big has the pivot been to M&A?
Very big. Fortunately, we're involved in a lot of them. So, for example, if the equity markets are closed, but when San Miguel, the Aboitiz Group, and MVP Group Engine decided to work together for this LNG project, so we hopefully finance them. When part of the M&A, when they tried to sell the CBK power plant, we're also hoping to finance the winner of that. The other hydro projects, the pump storage hydro projects of EKR, Ricky Razon, we're hoping to finance that. So and then a lot of the companies, they're talking to themselves, at least if they cannot tap the market, we'll help finance them, but then they'll acquire each other or do new alliances together. At least in a way, they're frenemies. They're competing at the same time, they're working together, which is good. At least it's an alliance and it should be good for the consumers also.
Okay, Ed, even in a down market, you've got visibility across all sectors. What's looking attractive right now for investors and for issuers?
Okay, so the equity markets are tough from the common share IPO perspective, but we still have a lot of pipeline for the preferred shares because that's where there's a good marriage between investor and issuer demand, supply and demand, because it's quasi fixed income with dividend yields. So we're doing a couple of more perpetual shares for Petron, for San Miguel, for other entities. Even for Ayala, when we did it, it was very well received. So investors like that. So it's equity-like with almost like a regular coupon. People like that. And then yesterday I was discussing with President Juan Munzon also. Maybe we should push more for IPOs of preferred shares, which are allowed by the PSE. Nobody has tried it, but it's actually there. So if a company doesn't want to dilute themselves, but they have good cash flows, let's IPO you with preferred shares, and then that's allowed by the PSE.
Okay, interesting. What are the other reforms on the docket that would help really move the needle? I know there's interest in smaller float requirements. Is that something that
Yes.
you're in favor of?
Yeah, I totally agree. I think it was Singapore and Hong Kong already have started that. So their precedents. We're talking to Francis and his people, Commissioner Bryan, Commissioner Quevedo, Roger Quevedo, trying to see if they'd be open to that, because what's happening in other jurisdictions, they're reducing the float requirement because of the market.
Yeah.
But it's allowing now these companies at least to retain their listing rather than forced to delist. It allows them to buy back more shares without triggering the
And
float.
it's going to be graduated.
It will be graduated. The bigger the company, the better. So this is good not just for existing companies, but even for IPOs. For example, if we're able to convince GCash to eventually list, although I think they said that they're not in a hurry, they have access to capital. But a smaller float requirement will be great, because then you don't have to flood it, because it's so big, it's
Yes.
hard to sell, right?
That's absolutely
great,
right.
yeah.
That's something to look forward to, a reform to look forward to get more people to want to list.
Yes.
Ed, I also wanted to ask you, last question. We're in the fourth quarter of the year, looking at 2026. What's your outlook for the market, for the economy, especially with a shutdown in the United States? A lot of that's going to depend on the duration and the severity of that, but what's the interplay, and what does it mean for us?
Yeah. No, for the Philippines, of course, it's very hard. No, we're fortunate in the sense that we've always been a consumption-driven economy, right? So our GDP will all continue to grow. Whether it be 5.5%, we're steady. We're a 4x4. My complaint, though, or my only concern before was when others already going up to 200 kilometers per hour, still at 60 to 80. It's like our trains, right? We don't have super fast trains. But then, when the roads are bumpy, we will still continue to grow, right? So that's the trade-off. So I'm still hopeful for the Philippines. I guess if all this floodgate, all this ICC or the one headed by Andy Reyes, by Babe Singson, and by Rosana Fajardo, I hope they're able to do something about that, because if the government shows that their people, there's accountability, that will improve the sentiment from the foreign side, because the companies here are doing their job. But then when we go out to the market, a lot are questioning the governance of the country.
Yeah.
So hopefully that will be, something will happen, and then that will mean more investors will come in.
What's
and then,
that catalyst that needs to happen, Ed? What do we need to see to show that the government is serious?
I think
Is
they
it
have to show that,
accountability?
accountability. There has to be. But at least we're seeing signs of that. The fact that it was in the sauna and things are happening are great. So we just want it to continue. If it proceeds and it's that there's no whitewashing, then the market will improve, our valuations will improve, and it's good for the country.
Yeah, accountability. We hear you. That's what we're all batting for. Thank you so much, Ed Francisco, the president of BDO Capital, for this very enlightening segment. Okay.
Thank you, Mike.
We're taking a short break. Business 360 will be right back. Welcome back. The SEC awards Maynilad Water Services the country's first green equity label. In a September 26 letter, the regulator says Maynilad qualifies as 100% of its revenues come from water-related activities, supply wastewater treatment, sanitation, and new installations. That's double the 50% requirement. An external review also shows that 95% of Maynilad's capital spending and 87% of operating expenses go to green projects, with zero income from fossil fuels, well below the 5% limit. On another front, Costco Capital steps up its share buyback, repurchasing 342,600 shares worth 2.64 million pesos. In a disclosure, the company says that the shares were bought at 7 pesos and 70 centavos each. The transaction is part of Costco Capital's 4 billion peso buyback program. Now, the Philippines gets a boost in the global innovation rankings, with port operator ICTSI of Bilyonaryo Enrique Razon recognized as the country's leader in intangible asset intensity. ICTSI scores 85.94%, meaning nearly 9 out of every 10 pesos of its market value comes from intangible assets like proprietary systems, brand reputation, and long-term port concessions. The company blends physical infrastructure with digital systems and expertise, managing 33 terminals in 19 countries. The recognition comes as the Philippines climbs to 50th out of 139 economies in the Global Innovation Index, up from 53rd last year, driven by digital adoption and high-tech exports. For investors, it shows how value creation is shifting beyond hard assets to brand, technology, and expertise, a sign that innovation is becoming a critical driver of long-term growth. Now, government agencies are scrambling to deliver aid to quake-hit Cebu. The Philippine Charity Sweepstakes Office has sent evacuation kits on board a C-130 with soldiers airlifting supplies to hard-hit areas. The Davao City government is also sending relief, including rescue and medical teams. The Philippine Navy is lending support, transporting essential provisions through the BRP Dagupan City. The Health Department is airlifting crucial medical supplies in coordination with the Office of Civil Defense. Health Secretary Ted Herbosa says under the directive of President Ferdinand Marcos Jr., they will ensure the continuous delivery of emergency health services in Cebu. Now, former Senate President Francis Chiz Escudero writes to the Commission on Elections, expressing willingness to be investigated over reports he accepted 30 million pesos in campaign donations from a contractor in 2022. COMELEC Chairman George Garcia says Escudero confirms the donation but denies he's being singled out. Now, Garcia has inhibited himself from the case, pointing out he once served as Escudero's election lawyer when the senator ran for vice president in 2016. The poll body is also looking into other officials named in the PCIJ report, including President Marcos and Vice President Sara Duterte. Now, the Bilyonaryo Villar family faces a DOJ investigation over possible conflicts of interest in the awarding of government contracts. Justice Secretary Jesus Crispin Remulla says the probe follows a BNC exclusive showing the family and their allies bagging 18.5 billion pesos worth of contracts for Las Piñas. Remulla adds the DOJ will also zero in on so-called contractors or members of Congress involved in construction deals. He stresses that this is illegal, even if the companies are under the names of their children or other relatives. With billions of dollars in remittances flowing into the country each year, global financial giant Western Union goes fully digital, launching a mobile app that lets Filipinos send and receive money both here and abroad. Paulo Barcelon has the details.
Remittances both here at home and abroad can now be sent through a tap from your smartphone as Western Union launches its Send and Receive app in the Philippines, its first global market for digital remittance. Key officials from the global finance provider gathered in Makati City Wednesday to signal a bold new move for one of the Philippines' most trusted financial brands.
Basically, you could pull from any bank account and use that as payment and as a source of funds so that you could send it abroad.
The OFW is at our heart, right? So it's very important for us to serve them. And I think the combination of those features would really help us here in the Philippines.
Through the new Western Union app, Filipinos can send and receive money to loved ones at home and overseas and avail of competitive foreign exchange rates. The company has partnered with Philippine banks and e-wallets via QRPH to allow Filipinos to send and receive hard-earned money from fellow kababayans. The new app also allows Filipino freelancers to get paid by international clients faster, as Western Union supports hundreds of currencies worldwide. With the country earning $38 billion from remittances in 2024, Western Union's top 4 countries for transactions include the US, Canada, Middle East, and Australia. Despite its digital pivot, Western Union says its retail side will be here to stay, complementing its expanded digital presence.
Access to cash, access to retail remains extremely important, particularly around the rural areas and the provinces. So we don't expect digital to cannibalize our retail. On the contrary, we do think that the sum of the two channels will bring more customers to our brand.
Western Union also says its transactions are kept safe and secure and boasts of a best-in-class customer service. The app is now available on the Apple App Store and on Google Play. Paulo Barcelon, Bilyonaryo News Channel.
The Trump administration hits pause on its plan to impose a 100% tariff on imported pharmaceuticals as officials review drug makers' proposals to shift manufacturing back to the U.S. and cut prices. A White House official says that the tariffs, initially set to take effect this week, are still being worked on. But companies are warned start onshoring manufacturing or sell drugs at most favored nation rates. The move follows a meeting between Pfizer and CEO Albert Bourla and President Trump in the Oval Office, where Bourla pledged to lower drug prices at the president's urging. He was among 17 CEOs Trump personally pressed with demands. On another front, Israeli forces intercept an international flotilla attempting to deliver medicine and food to Gaza. Aid organizers say that the fleet was illegally stopped in international waters. They claim signals were jammed before boarding began, cutting off communications between vessels. The global flotilla consists of more than 40 civilian boats carrying about 500 parliamentarians, lawyers, and activists, including Swedish climate campaigner Greta Thunberg. Israel's actions trigger protests in various parts of the globe. Hundreds of demonstrators gathered outside the Israeli consulate in Turkey's capital, Istanbul. They urged the Turkish government to take stronger measures in defense of the flotilla. In a separate demonstration, protesters gathered outside the U.S. Embassy in Ankara, expressing their support for Palestinians in Gaza. In Buenos Aires, Protesters demand the release of activists on board the flotilla detained by Israeli forces. They call the interception of Israeli forces a criminal attack and a violation of international law. Now, elsewhere, British primatologist Jane Goodall has died at the age of 91. Her groundbreaking research on primates transformed the world's understanding of animal behavior and helped shape global conservation policy. Her institute says she passed away of natural causes in California while on a speaking tour in the United States. Goodall was also a pioneer in linking conservation to business practices, advocating for sustainable supply chains, responsible land use, and corporate accountability in protecting biodiversity. She was named a UN Messenger of Peace in 2002, appointed Dame of the British Empire in 2004, and awarded the U.S. Presidential Medal of Freedom in 2025. And that's it for Business 360. I'm Maiki Oreta. Thank you for joining us, and keep it here on BNC, the Bilyonaryo News